How many Fed rate cuts? Welcome to this video on next week's Fed meeting. The Fed is likely to cut its policy rate by 25 basis points next week, thereby initiating a rate cut cycle. However, a big 50 basis points move is rather unlikely. After all, consumer prices, excluding energy and food, have risen recently quite sharply. The Fed is likely to cut its policy rates further in the coming months. After the September move, we expect 5 further rate cuts of 25 basis points each. The upper limit of the rate corridor would then be 4% in the middle of next year. The central bank will cut its interest rates primarily because it believes the inflation problem has been solved and now considers the economic risks to be greater. According to its dual mandate, the Federal Reserve must ensure both low inflation and a high level of employment. Our forecast is based on the assumption that the US economy will not slide into recession. If it did, the Fed would lower interest rates significantly below our forecast of 4%. Ultimately, however, we see only a 1/3 probability for this risk scenario. This is because financial conditions are hardly restrictive anymore, partly because banks are taking their feet off the credit brake. How the stock market reacts to the rate cuts depends on the economy. If a recession is avoided, as we expect, the stock market usually benefits from rate cuts. If, on the other hand, a recession does occur contrary to our expectations, share prices usually tend to weaken despite rate cuts.